Well, let's talk about the Outlook 2021, which continues to pour in from various MNCs brokers. So we've got you a lot of Outlook coming in, whether it is from JP Morgan, Citi, Morgan Stanley, CLSA, various other companies. But this time around, we've got an interesting report which has come in from Vikash Kumar Jain of CLSA. Again, he's the strategist over there, and he's been writing about what to expect, what not, as far as Nifty, some of the stocks, and how things should actually move on. So it's a very interesting report which talks about the 2021 themes that investors should actually look for, and this is particularly specific with India. So first thing, of course, is a recap saying that the year has ended with Nifty being at an all-time high. Returns from the low have been quite phenomenal, and that's why expectations are not low. In fact, as many as when you've seen such sort of returns, such sort of closes, the next year, it's not that returns are not there, but returns are very, very limited or not particularly that high as one could have seen earlier. So that's the first thing that they say. Now, why this has happened is because people are seeing recovery coming in. Recovery has come in much faster after the various lockdowns that you had seen. And that is one of the key reasons for this recovery, and which has led to FII buying. So FII buying has led to this recovery. This has taken the valuations of Nifty particularly quite high, and that's why they believe that earnings growth or earnings delivery will be one of the key themes to watch out for. They have looked at the Bloomberg consensus, which tells them that earnings are expected to double as far as the overall EPS estimates are concerned over the next 3 years, and that's why earnings recovery, especially in FY22, where growth from a lower base is expected to be quite strong. So that is one theme that they would be looking at. The second, of course, is the macro play. So what's happening on the macro side is, according to them, is that recovery has started. It started to expand, and it's continuously growing, whether you talk about November, December, or various other months that we are talking about. So that recovery has to continue, it has to maintain, and that will also be one of the key themes to watch out for. Once you start seeing a slowdown over there, probably things could change. Now, rates have been particularly low in India, and that is something which they believe will be on the lower side. But on the bond rate side, they do not expect much changes. The problem here could be what happens to inflation, what happens to RBI stance. So those are two things to watch out for in terms of inflation, what one has to look at, and in terms of the RBI stance, whether they particularly change that or not. In terms of stock specific, they believe that the index level returns may be on the lower side, or may not be that great, but on a stock specific, sector specific, where you see recovery, things would tend to continue. They have a list of top 10-15 stocks that they like, the likes of Infosys, ICICI Bank, various other cyclical, non-cyclical come in as a part of their list. Again, these may not be recommendations which may come in, but at the same time, these are some of the stocks that they would eye out for. Over 21, some of them are recovery plays, some of them are plays as far as growth is concerned, some of them are plays on market share, some, as I told you, are cyclical, and some are probably non-cyclical as well. So overall, that is their view coming in. Earnings growth, maintenance as far as this recovery is concerned, and rates should be lower for markets to do well.